Okay, good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, July 27th. Michael Boutros with you on the horn, Aurelian J. Ted, everyone in the room, good morning to you guys. So we are getting, you can hear me rubbing my hands together here. We are getting the pullback in the dollar that we were looking for. It's materializing on the euro. It's materializing on some of the other crosses we've been following. FOMC's on tap tomorrow. So you do have major event risk. The devil is going to be in the details. No expectations, obviously, on a move on rates, but certainly the dot plot has continued to shift. We're not going to get an updated dot plot or quarterly projection tomorrow, but we will be getting the updated presser with Powell, where people are going to start pressing him more on this inflation story as it continues to get, 13-year highs in month-on-month inflation. And really, it's going to be the big hitter tomorrow, guys. So all the dollar crosses are in play. On the menu today, we'll hit DXY, Sterling. I did do a piece on Aussie yen, just an incredible move there I wanted to cover. Silver, a lot of you guys have been asking about silver, so we've been on the mark with that one. Euro, crude, Aussie, gold. Quick look at the SPX, dollar CAD, inflation's on tap tomorrow. And you do have New Zealand dollar and Bitcoin. We'll take a quick look at those. Any other questions or trade setups? As always, feel free to throw them on the message board at any point. Here's what the DXY looked like right into the start of the week. So on Sunday, I gave you guys this update. Right before we opened the week, we noted 93.01. The high week close was preserved on a close basis, meaning last week we did go an intraday high higher, but we closed the week back below 93.01. And we started to say in the start of the week, listen, this is like the quintessential exhaustion trade. Momentum is right at 60. Price is right at resistance at the high week close. We're looking for a reaction. Now, the daily chart also had us at uptrend resistance, and we continue to note the ongoing momentum divergence there. As price action pushed into a newer high, higher high, higher high, a series of lower highs. So into the start of the week, the game plan was look for possible exhaustion. The long side seems a little tired here. Here's what it looked like on the daily chart. Here's what it looks like now. Okay, you're seeing a second daily decline here into the start of the week. Here was yesterday. Here's today, right at slope support. So everything is right as planned, right? If we break this slope, you have the monthly open at 92.35. And then the monthly opening range low objective level down into the 92 handle. So 92.35 and 92 are your downside levels if we break lower from here. Keep in mind, we are still under the assumption that the dollar has broken out, that we are still in a broader uptrend. All we've been arguing since the outside day reversal we made here on the 21st is the risk for exhaustion, the risk for a corrective pullback within the uptrend. That's what we're getting. Here's what the intraday chart looks like now, and here's what it looked like into the start of the week. Here's the Sunday open, talking about looking for exhaustion, head that upper parallel. We need to break below the high day close, 92.76 to get the go. Quick move, right in slope support, failure, 92.76 again, 77, break lower. Support is at 92.40, right? Is that median line for the proposed pitchfork? Remember, I don't have enough conviction on this yet, but it puts the median line right at the upslope that we've been following. So all things held constant, looking for a reaction here today on a drop into the 92.40 region. That's the level that needs to give out. A break below that, and you're looking, like I said, for a run right into the monthly opening range low. That converges on slope just above 92. So at this point, I just do want to highlight the weekly open resistance. I wouldn't want to see anything surpass 92.90 on a rally if this is heading lower. And of course, we have the FOMC on tap tomorrow. See how that turns out if we shake out anything here. But the levels are pretty clean. Again, a lot of these trades are going to get quiet. You're going to fall into the summer lull. You're going to fall into the pre-FOMC lull as markets essentially will go into a holding pattern starting midday today to tomorrow. So keep an eye on that. Any questions on DXY? No change to any of the levels from early in the week. All right, so where does that put us on I guess let's hit euro real quick before we move on. Here's the euro, same trade. This one's even tighter. Okay, I was talking about this one in the webinar with you guys yesterday. I hope some of you caught it. We were holding a long position against that low as we opened the week and drew lower. Perfect opportunity to take a stop. Faded out of some of it already, but it's not really a very strong move. But we're coming off of key support. Once again, euro dollar, low we closed, 117.60. Couldn't close below that last week. And that's the bump we've been trying to trade off of. Again, longer term, still no one's refuting the downside bias, but certainly, again, key lateral level, momentum right at 40. Could see a little bounce here. That's what we've been focused on. Here's the daily chart. Again, little consolidation, contraction, descending wedge formation, whatever you want to call it, had us opening the week right here. The low we closed, 1760. This is now also the objective monthly lows. You have this consolidation, looking for the rally first just into that parallel, like 1830s. Here's what it looks like on the intraday. 1824 is going to be the high that we set sort of on this last swing last week. You could see that moment, that basic trend line converges right there. If we clear 1830, 1826, that would be an objective breach of this basic 3-point trend line. And you could even say that was a breach of possibly the weekly opening range. Only concern on this, guys, and again, if we hit 1825, I'll probably be out like a 3/4 of this position. I really don't want to sit here with too much on it, but really nice spot. If this does break 1856, 1895 is just the monthly high. So the levels, again, are just super clean here, guys. As I said yesterday, I'm not really interested in short side exposure because of the dramatic nature of the levels just below, right? 1760, 1730, 1695. All three of these levels represent extreme, significant technical support. Don't take my word for it. This is your low we close. You've already gotten 5 rebounds off that. This is the yearly low day close. Haven't even tested that yet. This is right below the objective yearly low. So all three of these levels are super dramatic. Here, the first rebound looks pretty decent. Need to break that parallel. If we get into here, like I said, I'll probably bail on most of the position, but that's sort of the breakout zone. If we are going to extend higher in euro, don't really expect much before Fed, just as a objective note there. But we'll see. Could happen. A lot of participants are still checking out what's going on the fiscal side, guys, with this infrastructure package. It didn't look like that passed. They were talking about Monday possibly being a day where they give it another shot. The longer it lasts and the longer the talk and the discussion goes about it, the less likelihood we'll get that passed in both the House and the Senate. So it's going to be interesting to see how this pans out. Euro dollar at support, looking for possible breakout here. But at the end of the day, we're going to respect this near-term contraction or consolidation formation. Questions on euro? All right. Moving right along, that was number 2. Let me go to last night's update. So last night's update, I just wanted to highlight A, silver, because I've been getting so much feedback on silver, but B, sterling. The rally extended into the 38.2, and that was the game plan. We're looking for possible exhaustion here or here to satisfy the correction within the broader downtrend. Here's what sterling looks like now. The whole premise of the trade was right here on the weekly chart as we had dropped last week into the Brexit gap, a massively important pivot in price ever since 2016. The median line for this year's descending formation, last week we dropped well into that, tagged almost the 52-week moving average and closed way above that level. A quintessential, once again, exhaustion trade into downtrend support. So our initial inclination to the start of the week was, whoa, dollar's extended. We just talked about DXY at resistance. Let's look for a little bit of a sterling recovery here off of downtrend support, and that's what we're getting. Here's sterling on the daily charts. So you can see obviously the dramatic nature of that drop. Let me just zoom this out a little bit. That drop There's that Brexit gap. There's the tag of the objective February low. And here's where we rebounded last week. So this is the first major level of resistance, 38.30. Okay, we're there now. Downslope resistance is there now. The monthly open, okay, which comes in at 38.26, is right here, right now. I want to see a reaction. If we get a pop, I don't think it's straight bullish, but I'd still be looking for a reaction here. You have the 100-day moving average. You have basic trendline resistance off the yearly highs. You have former trendline support from the May 22 low, one touch, two touch, kind of a messy break, but that also converges on that same level. So for me, it's all about the stretch into 39 if we get it, but I'm looking for possible exhaustion on this bounce. So what does that mean for the intraday? Here's what it looks like. Real tight, okay? The levels I showed you guys last night are still spot on. That held resistance. We pulled back, slope, held support, right back at the highs. Look for a reaction here today, again, into 1840. I know the retracement comes in at 1830, but the slope series converges just higher. So if we get past 1840, okay, fine. A possible fade scenario if we get on a stretch towards the upper parallel, towards 39. That's sort of what I'm looking at here with sterling. If you're holding a long position, good on you, okay? You want to kind of reduce positioning as you get into these levels and bring up your stops. If you're looking for new positioning, my humble opinion, I'm not interested in playing the long side. You've kind of already missed that. I mean, if you're comfortable taking a stop against 65, if you're comfortable taking 60 pip stop, that's your prerogative. But a little too big for my blood. So I'd rather be looking for a reaction here. It very well may break, and we might be seeing sterling making a larger recovery. If any trade is going to go north against the dollar, sterling is the one I actually prefer. But that being said, my focus is on a topside exhaustion print on a sort of a stretch near 39. You don't have any data of note from the UK for the remainder of the week. So pretty much look for dollar price action to drive here, pretty much look for broader market sentiment. And if we look at the dollar, by the way, guys, we looked at DXY, just a quick reference here for the 10-year. We're holding resistance, and this is all I've been looking at. This is the daily chart for the 10-year. I've showed you guys this many, many times. The break of the support structure off of the August of last year saw a test of that slope as resistance, and it's still holding. So at the end of the day, bearish invalidation still 37.55. Support still 120. It's the 618 of the near-term rally. And I want to see a break of this range. Long and short of it, again, Mike Boutros's fairy tale opinion, if all things were sort of up to us, you'd get sort of a little bit of a pullback, one last stretch into confluence slope resistance, and then we'd look for a reaction there, either the breakout for the resumption or the correction off the low would be over, and you're actually looking for a deeper cut. I know that might be looking at it from both sides, but to show you the near-term price action of how I'm looking at this to kind of unfold over the next couple of days. Certainly heading into the FOMC interest rate decision, this will be something absolutely paramount. The inflationary picture on what the Fed suggests inflation is doing will also impact yields. So keep an eye on this one tomorrow. Key supports the 120. It's 1, 2, 3, and 4. All right. Also from last night, I wanted to go over Aussie yen. So we covered Aussie yen, if you guys remember, earlier in the month, and it was a phenomenal trade. We basically caught this one a couple of times. We're following it all through July. Got really nice plays on the downside, kind of the only yen cross I've been messing with over the last couple of months, but really nice moves. So last night, we noted that we had come into a confluence support zone, not by way of lateral or Fibonacci support per se, but by slope. And here's what Aussie yen looks like first on the weekly charts, and then we'll drill down. So on the weekly, right, a basic 236 of the 2020 advance gets you 79.68. The 2019 high week reversal close gives you 80.26 or 80.02, excuse me. The 52-week moving average was right in that zone last week. It's exactly where this thing bottomed and rebounded. So all things held constant, you got a big zone there, really big zone. Near-term resistance, 1,000 feet up, you got 82.80, the 50% retracement of the drop. Bearish invalidation, 83.50. So what does that mean for the near term? Well, here's the daily chart. So the pitchfork we've been following off the highs, median line break, rebounded off the 25% parallel in blue. If you remove this, just for argument's sake, basic slope off the high, a parallel off that from the low that we made in April there, just caught the lows. So you could see some formation here, decent parallel action with the rebound. How much does this rebound have to go? That's what the focus is right now. Yesterday we closed above the median line. I'm not gonna lie, I thought we would get a little bit of a pullback here, but I still think that the broader trade gives you a larger recovery towards 82.11. Again, that's just a basic 38.2 of the drop. Slope is even higher. But is this the extent of the recovery? Here's what it looks like on the intraday. Okay, this is a 4-hour. And here's what it looked like last night. So here's the bounce off of near-term channel. Looks like we could be breaking, guys. I don't want to stress this slope too much. It's really short term, but all things held constant, we're holding the opening range low from yesterday. Okay, the low day close is 80.46. As I noted in the report, we're looking for a swing low ahead of that. Okay, basically risk for a correction while above that objective weekly, low day close. So even if we were to correct a little bit lower, look for reaction here. Again, 82.11, 82.12 near-term resistance. Bearish invalidations up here. I don't know if we get that quite high, but that's sort of the focus that we're looking for here on Aussie yen. Going to be a risk-sensitive pair as it typically is. So watch for FOMC definitely to shake things up here as broader risk sentiment in general takes a hit. But I still think the rebound off of downtrend support has a little bit more gusto on the upside. Questions? Aussie yen. Last but not least from yesterday was silver. And again, there's so much interest on silver. I don't really typically get too involved in this trade, but the interest from you guys has been there on Daily FX nonstop. So here it is, guys. I kind of did some more work on this last night to give you guys a little bit better of a view of the broader picture. The 2021 low week close, basically this year's low week close executed right back here in March, gives you 24.94. Now that's also converging on the median line for this formation. What do we do there? What's this now? Is this support? Do you want to buy that, or do we look for the break? Here's the daily chart. It really is critical, and there's conflicting signals here. So if we look at this on the daily, here's your July open. You set a July high in the first 6 days of trade. You set a July low in the first 9 days of trade. You break the monthly opening range low on the 16th. An objective bearish signal looking for a late month low. Now the drop made an outside daily reversal a couple of days later off of that key support we just talked about, the low week close. It's also the 786 retracement of the yearly range, or the advance off the yearly low, I should say. And again, that median line, even near term, basic slope off of this month's high, extending off these lows from last month, you're right there. So what do we do here? Well, again, the risk is for a little bit of recovery. Here's what it looks like on the intraday chart. It's really tight since the start of the week. As a disclaimer, again, I don't have any exposure on this, but I'm looking to see if we can get some sort of jolt as we get deeper into the week. Here's what it looked like last night, right? Real tight, nothing's changed. July opening range low is 25.74. Near term bearish invalidation is at 26.10 to 26.28. If we break through this, I do think we risk a larger recovery in silver. All things held constant, we're coming off of downtrend support. Here's downtrend, resistance, plain and simple. Now on the continuation trade, if we do break lower, again, some key levels to keep in mind. The low day close for the year comes in at 24.40. The yearly low comes in at 23.78. So clear-cut levels on the downside if we break. But right now, looking for possible inflection off of this key zone in silver. Any questions on silver prices? Okay. Okay, let's take a quick segue into crude. What a rebound. We nailed the support structure like no one's business. The rebound just ripped, and we even broke near-term downtrend support, so or resistance rather. Here's what it looks like on the weekly chart. Again, couldn't be a cleaner trade. We talked about 66.57. We talked about what was the bottom end of that range? 65.92, 2018. Low we close. You have the highs from 2019, the highs from 2020, all lined up right here into slope support. Beautiful move last week. Saw this whole drop recover to close higher on the week. You're looking for that rebound to stretch a little bit in oil. Here's what it looks like on the daily chart. You've already taken a 618 of the entire drop off the highs, right? Remember that outside day reversal we talked about? Boom. Here's the 618. We tapped it yesterday, 72.41. Support now at that slope just beyond yesterday's low. So I want to call it like 70.30s, 70.25. That's near-term support. Monthly open resistance is right at 73.44. That's the level we need to breach to break the downslope, to validate a break of the monthly open, to validate a break above the median line. All right here. Don't have any exposure myself on crude. Here's the intraday chart. Not really sure how to approach this from here. There's nothing to do here, in my opinion, from this level. You're either looking for the pullback and a sort of reaction near that median line. Now comes a little bit higher than yesterday. 38.2 of the drop is just 69.60. So sort of this zone. You need to break above this zone to mark resumption. And at the end of the day, guys, this has just rebounded off of uptrend support. If this correction off the high is done and we're right back onto the uptrend, support should hold here. Broader bullish inval for the near term now gets raised to 67.87. I don't want to wait to this. If we break this, I'm done. Make sense? So it's important, I see that question. It's important not to get too confused and try to filter in too much of the tech of the fundies, okay? From a fundamental standpoint, I'm still constructive crude, okay? You're looking at inflationary pressures. You're looking at decreased supply with all the administration's new changes and alterations. We're going to be more heavily reliant on imports, right? And even the regulatory environment, really trying to push for new clean energy and all this stuff. So if you look at the fundy picture and you make a list, yeah, crude it should be constructive. It's just going to get squeezed and squeezed. Demand is still going to increase, supply is going to decrease. From a technical standpoint, guys, we can't forget that this thing has already made a ridiculous rally. All we're trying to gauge is the washout done? Is the correction done? And are we right back on the march? That doesn't happen until we clear the monthly open. Okay. That is number 6, crude. Number 7, here is Aussie dollar. Today, you do have Aussie inflation after the close this afternoon, expecting a clip of 3.8%, which would be a pretty strong read. We haven't seen that read in a couple of quarters, but remember, this is the second quarter read for Australia. Previous read was 1.1%. Here's what Aussie looks like. Well, first on the daily, and then or weekly, then on the intraday. But remember, this trade, all you need essentially for Aussie is this one chart. I talked about this with you guys yesterday at length. Descending channel, descending pitchfork. You had a sliding parallel from the lows in January. Perfect tag into that low from the May 2017 stretch. Perfect pivot in price, resistance, resistance, a little bit of a false break scenario, breakout, all of that converges on, again, another sliding parallel for the operative slope we're in. So any way you slice it, you're at support. That's my only thing about Aussie. So I'm looking for reaction here today. I'm looking for reaction here this week. Here's what Aussie looks like on the daily charts. Downtrend support, same formation. A little closer review. There's the sliding parallel from the lows that we made in February. Boom, outside day reversal off the lows, shifted the focus higher. You really need a pivot and a close above 74.13. That's the September high from last year. That's the 618 parallel for the pitchfork we're in. We need that break to suggest a more significant low is in place. So we're not out of the woods yet. Again, another trade where if we had to take a dollar pullback, I think this is one where you could get a little bit of a snap. Not as strong as, I mean, again, I would default to sterling on that, but it certainly looks, if we pivot above 74.13, we could see a little bit larger of a recovery here. Here's what it looks like on the intraday. Starting to get a little messy. Oops. And here's what it looked like on our last update. Went over crude. Here's Aussie. So right into the start, or I guess this was into the close of last week, we wanted to highlight this key region of resistance. It's still in play. The descending channel, you know, I don't want to say it's messy, but here's, I mean, this stuff, you can't make this stuff up. Let me look at this at 2 hour, show you something. So if this is a break of channel resistance, a break of resistance and retest of support actually validates this break and keeps the focus higher. Now, the only problem is, despite that break of the slope and test of it as support, it's still below resistance. That's my problem with Aussie. I'm gonna like have a aneurysm over this. So if this break was legit, okay, maybe you fail here and you go for a test of former slope resistance as support, but then we should really mark resumption, guys. So if Aussie fails today, again here at 74, it falsifies the break of this channel resistance and it nullifies that signal. So look, for Aussie, I think it's setting up cleaner and cleaner in that the weekly opening range is super tight, just below resistance. If we break this, yeah, I think you see 75 pretty quick. But at the end of the day, we need to see follow through like over the next couple of hours if this is going to work. So your stop is against the low. You need that break, accelerated top 75, 75.18 be your first sort of target. Also, we don't have any gradient to the advance yet. I was looking for some sort of formation to look for here. Didn't quite get it yet. If we just use some basic slope action here, again, you know, kind of gets you problematic as you get back above 74 there. So long story short, let's see what kind of reaction we get. Look for a break of the weekly opening range. We're at major support, guys. If we buckle above 74.13, look for a larger recovery here in Aussie. Remember, inflation on tap tonight from Australia. All right, that is number 7, Aussie dollar. We're making good time here. All right, so I guess before we jump into the commodities, let me just hit dollar CAD and Kiwi first. Dollar CAD, you have inflation data on tap tomorrow there. Core inflation rate, last read we got was 2.8%. Headline inflation is expected to come in at 3.2, which is actually softer than the previous read we got. But here's where Aussie stands now heading into Tuesday. Dollar CAD on the weekly chart. Remember, last week we exhausted into the high week close for the year. That was 27.74. 52-week moving average was in there as well. Upslope channel resistance was in there as well. So when we failed, this thing faltered so hard, it closed the week back below this key lateral level. Look at that. So all things held constant, we're still below resistance. And the pullback play is what we've been focused on. Here's what it looks like on the daily chart. Again, uptrend resistance. Here's the yearly open, 100% extension. Obviously, we soared right through that. Here's the pullback. The premise idea is you still got to settle a little lower before you work on the resumption. And that's what I've been focused on. The weekly open's been tight. Here's what it looks like. It's not really like much to write home about. So the pullback, as we highlighted last week, we were looking for the drop towards, where's dollar CAD? We were looking for the drop towards the median line, looking for still on this recovery, 2653, possible exhaustion, still 27 for a move lower, 2501 would be just a basic 38.2. Here's what it looks like now. Here's the highs from June. Here's the 38.2 retracement. Here's your weekly opening, straddling the median line. So the levels look good. Again, pistol to my head. I think even if it recovers, you still look to fade that for a deeper correction. But levels to know on the downside, 2490, 2486 into 25 basically. Bullish invalidation at 2365. We need a break above 2713, the yearly open, to essentially mark resumption here. So inflation data tomorrow, right ahead of the Fed. Maybe we get some plays on this. I don't know, but it's been super boring. Hopefully we get a kick here. Last but not least, from the com block, from the currency side, is New Zealand dollar, another one which is getting kind of messy. So here's what New Zealand dollar looked like earlier last week. This formation was holding so well. We talked about the weekly open here, which held as resistance. Now into the start of this week, we popped through it and pulled back. What the heck is that? Is that a break of the downtrend, or is that a false break and we're actually going to tumble lower? Kiwi's kind of been all over the place with this recent move. Here's Kiwi just as a reminder on the longer term charts. From the weekly chart, we're still at critical support. 69.41, 69.69. That got 2019 high, 2018 swing high from December. Basic slope support. It's all right here. 6 weeks, guys. 6 weeks we've been trying to break below. So I can't get bearish right here at support where we've been holding for 6 weeks. This doesn't make any sense to me. So have to look for either the rebound to sell, or if we get a decent position or we get a decent signal, maybe even play the rebound. Here's what the daily chart looks like. So what do we do with this, right? Looks like we set up a really nice monthly opening range right above support. Last week, we closed below, false break scenario, put us right back in the range. And now we're attempting a break of the downslope. Right? I don't really like this. So at the end of the day, here's the intraday chart. I showed you this slope yesterday. I still don't have too much conviction on playing this upslope yet, but it would suggest that, you know, basically any intraday, intra-week losses should be governed by the 69 handle. So even if you get some spikes like you did back here, that should be the max. Median line comes in right now near 70.50, 70.45. Key resistance hasn't changed. Still the monthly range highs. 70.70 to 70.93. So unfortunately, still a bit of a snooze fest here on both of these, Aussie and Kiwi, both testing major support. Look, at the end of the day on both of these guys, if the downside breaks, it's gonna drop like accelerated style. Okay, whether it's the Kiwi trade or whether it's the Aussie trade, if these support zones break, again, the monthly chart or the weekly charts are just ominous if both of those support zones break. So it's really, literally, the battle lines are drawn. It's a make or break week for the dollar. Okay. Okay, out of FX, let's jump into, that was 8 and 9. Let's jump into gold. So the gold trade is becoming more and more important and more in focus as we get through all of this talk, all of this inflation talk. The more inflation talk you get, the more gold will come into focus. Look, so for the longer term scheme of things, the weekly chart has been, you know, super boring for gold. We're right in the middle of a range. We're not quite at support. We're not quite at resistance. So the premise starting into the start of this week was, look, could get a little bit more of a pullback, but essentially we're looking for a final stretch here. even if this bump is just corrective, you'd still want one last final stretch. It's either that or a break of the slope to give us the resumptive move lower. So the weekly chart puts you at 15 momentum and right in the middle of the monthly range. Not your favorite move. Go into the daily chart. Looks a little bit cleaner. Okay, so again, same slope. 1, 2, 3, uptrend support. 100-day moving average. Downtrend support. 2. Breach resistance. Now support, support, support. We're right here, guys. Holding support. Here's the intraday chart. Okay, so here's that debacle area. Here's your weekly open. You're setting up a weekly opening range right above the 2012 high. That's 1795, key support near term. This is your near term bearish invalidation. 618 of the drop is 1817. That's just above the weekly range highs, but it converges on the downslope and the 25% parallel of the upslope. So like this zone. If you break through that, I think you get another run towards 1830 and even 1850. It all depends on what happens here. Now, in the event of a downside break, I don't want to get faked out. It's not resumptive, meaning it's not just a resumption of the broader downtrend from last month's high until we clear 1782. This is 100% off the high, 618 off the low. You know my favorite Fibonacci confluences. So if this is corrective off the high, that's the max loss. If this is a pullback from the rally, that should be the max loss. Key resistance near term still 1817. Any questions on gold? I'm expecting some fireworks here tomorrow. Okay. The Fed comes out swinging, showing increased concern. Okay, guys, the inflationary picture, we did think it's transitory and it's running hot. It looks like it may run hotter than expected. Look for gold support. If they completely come out and Powell's diminishing the whole inflationary picture, guy, this is all just transitory. All the concerns that we're looking at right now are all completely supply based. It's not going to be something that's an underlying, inflationary pressure. You might see gold just go right through the floor. I don't think that's necessarily what Powell will say. I think he has to show at least an increased concern about the inflationary picture that we're getting, especially with the fiscal dump that may or may not happen soon. So again, stay nimble and keep the powder dry here on gold, guys. This is pretty big stuff. All right, last but not least, a quick look at Bitcoin. Obviously, that rally faltered yesterday, right at the high day close for January. That was 40,667. It's exactly where we faltered. Is a low in place is the question. Are we looking at the resumptive trade for Bitcoin? Guys, it very well might be, okay? Here's the trade that we've been looking at for a while. This is the daily chart. The biggest, or the two levels I've been talking to you guys about, which I think, I still did think until the start of last week, was a really good entry, was 28,999, basically 29,000, the objective yearly open. And here, this is the 618 of the entire rally off the lows from last year, and the objective yearly opening range low. It's your January 4th low. So we turned just ahead of it. If the break above the median line is legit, then any pullbacks here should still hold basically just below. The monthly open is right here, but just below maybe, and you'd need the resumptive move. At the end of the day, I still wouldn't want to buy up here if you're trading it. If you're a longer term guy and you think this is going to 100,000, you've been watching Tom Lee on CNBC, God bless you, good luck. But for a trading standpoint, there's nothing for me here to do just yet. Key resistance still 40,667 into 41,929. Okay, all right. That's everything that's on my list, guys. I have made good time today, and the lull is going to continue. If you're not holding any positions or you're kind of getting frustrated, just keep it cool. This is all to be expected, guys, ahead of a major central bank rate decision. Although we're not expecting anything major, the inflation, I can't stress enough, the inflationary talk is becoming more and more the central focus out of everything. It's not the employment picture. It's not, oh, are unemployment benefits pulling back employees. That's a whole different discussion on the political realm. From the trade standpoint, from the market standpoint, inflation is really starting to become a major, major concern. Jay, dollar yen. Yeah, sure. We didn't cover that, right? Let me take a quick look at it. So here's what dollar yen looks like. Look, at the end of the day, what do I want to say on this? The rebound did falter at a pretty major point. I don't know why I'm on the wrong set of series here, but here's dollar yen on the weekly. There's nothing really to show here. So the major on the weekly here, 109.68, still that major pivot. You saw yet last week, we pushed way below that. I was talking to you guys about that, and then we closed higher on the week. Whipsaw price action. Here's dollar yen doing exactly abominatory things, how it's earned its name. Here's what it looks like on the daily chart. So I highlighted to you guys yesterday resistance at 110.66. Didn't quite make it there. It's the 618 of the drop off the yearly high. Here's the turn lower. I'm not gonna lie to you, Jay. I don't know what to do with this, brother. Again, if you put a pistol to my head, I would say look for 109.67 on this stretch. But how you would execute a new position based on that move, I just don't have it for you. Here's what it looks like, Jay, on the near term. So, I mean, the only play for me would have been a tag of the 110.66 at least into the weekly open. Here's the weekly open. You actually gap lower, filled the gap, and just moved lower. So look, 109.68 into 109.56. That's still key support for me on the near term. So if we get into FOMC tomorrow, and we drive down and crush that, break it, I do think you risk a dump, like a major dump. This region right here, again, guys, on the weekly chart is this. We couldn't close below it last week, but if we push below it again, likely to see an accelerated move. Okay, you're still looking at support into 109.07, 109.18. But for the purposes of the rebound, I think that would be sort of terminal, and you'd be basically looking for a drop here and resumption. But for dollar yen, watch this area if we get down here, especially Jay heading tomorrow, man. Dollar yen tends to be a very strong reactor to US data, very sensitive to US rates. And again, with what the 10-year is doing, I wouldn't be too surprised to see some fireworks here on both of these. Jay, does that help? Wish I had more conviction for you on this, brother, but it's fallen into the abominatory moves that we see from dollar yen all the time. So pistol to my head, look for support into 109.56, 109.68. Jay says, yes, thanks. Hey, you're more than welcome. All right, guys. So if there are no other questions, we'll go ahead and wrap it up here. I do need to alter the schedule for this week, guys. It's my daughter's 7th birthday on Thursday, and I promised her a beach outing, so I won't be able to be here for the webinar. Listen, if things go haywire tomorrow, first of all, I'm going to give you an update tomorrow, obviously, right after FOMC. But if it does, I will pop in for a quick update in the morning before I head out. But as it stands right now, I'm going to cancel that webinar. So it really is going to be dependent on what price action is doing. Keep some powder dry. This is likely to be a very interesting week with what the Fed commentary does, with what the fiscal side, if they decide on anything, what's happening with the move in Congress. Markets are likely to see a lot bigger spike in volatility. And everyone was talking about what happened last week with the VIX, right? Oh goodness, the VIX, popped, but then it dropped real hard again. Here we are, guys. Okay, we're not down and out. And the longer things stay depleted and sort of condensed here, the longer reaction, the bigger reactions you do get when volatility does surge. So big event risk on the horizon. Keep the powder dry. Best of luck trading, guys, and I will keep you updated. If I don't see you on Thursday, I'll see you again on Monday, but I'll keep you updated on SB Squawk as always. Best of luck trading, guys. Cheers.